Well, hello again, Maverick Traders, and welcome back to your Maverick Psychology Corner. Today we're going to talk about anchoring. As far as psychological pitfalls that people fall into, I find this one to perhaps be the one that brings out the most aha moments where people go, okay, I've definitely fallen victim to that one. So let's talk about what it is and how it works. And always remember, put these things into your trading plan. If you find yourself in a situation where you're susceptible to one of these biases or psychological pitfalls, then put things in your plan to basically guard against them. So anchoring, a little bit of background, it's again one of these behavioral finance things that is found with the emotions of economic choices. So it's an irrational bias towards an arbitrary benchmark figure, something that might be completely irrelevant to our trade or to our investment, but we keep anchoring to that. And the danger there is that we're naturally inclined as consumers to think, well, I want to find a bargain or I want to avoid paying too high of a price for something. And so we anchor to certain prices. And let me give you an example. Here's a chart of the tech bubble. And in the tech bubble, there was Greenspan came out in like 98 or whenever it was and said this is irrational exuberance. Well, the NASDAQ was at 1,000 points. It proceeded to go to 2,000, 3,000, 4,000, 5,000, 6,000. It topped out way, way above where he called it irrationally exuberant. Now, the danger here with anchoring to certain prices. How many of you have done this before? Okay, I'm in something, I get out, and then it goes higher. Well, I'll never buy that until it comes to a lower price, right? We anchor to our prior exit and we say, well, I can't pay more than what I just got in at. So I find a lot of traders will actually avoid things that they're trading well because it's like, well, I made money on that last one, but now it's gone even higher. So can I really get into a new bullish trade at even higher than where I got out? Nah, I'll go find something else, right? They're anchoring to something that really isn't relevant to the new trade setup, the new risk, the new reward, the new probability. Where you got out has nothing to do with the new opportunity, and it might be your best trading candidate. But I find that people will do that, or this will be very commonplace. When the market started to crash, of course, we went from 6,000 to 5 to 4 to 3 to 2 back to 1. The NASDAQ lost 80% of its value. There were a lot of people that were sticking their neck out there and buying and buying and buying. And guess what their rationalization was the entire way? Well, look at how far we're down. Look at how discounted it is. Retailers will do this. It's actually something that happens in negotiation. If you can throw out a big number and get someone's mind to anchor to it, then when you come down in price, it feels like a discount. So when you see something that's come down a lot, you naturally think that it is some sort of bargain. Well, maybe it should have never been to 6,000 in the first place. So the fact that it's down 50% isn't a bargain. It's just getting back to a more reasonable, and it's still not even there, right? It went down 80% of its value. So what's something that's down 80% and goes down, something that's down 50% off of its highs, and then it proceeds to go down 80%. Well, it just got cut in half again, right? That's kind of the dynamic there. So prices that are coming down dramatically do not mean that they're a bargain. And prices that are going up dramatically do not mean that they are overpriced. I mean, it's just kind of what's the analysis say. So don't anchor to some arbitrary figure and say, well, price, if it comes down a lot, must be a bargain. If it goes up some, well, it must be over. That's not the way to do it. And that will get you into trouble in trading. This is a cognitive bias in which we use those benchmarks, such as purchase price or sticker price. This is why when you go in to buy a car, they'll put some sticker price on there. They want you to have some, figure in mind. Or if you're in a negotiation, they'll want you to have your mind attached to a high price, and then when they come down, it seems like a bargain. In politics. So Joe Biden, the new president, came out and basically said, we're going to raise taxes to X amount. And he threw out some huge figure. And the market kind of reacted to that, sold off. And I said, well, that's a dumb response by the market. He's throwing out a huge number, some high tax rate that will never go through. And the reason he's throwing out some really high number is so that when it comes down to a lower number, everyone will go, well, that seems a lot better than where we started. And the negotiation can be the Republicans can claim victory because they brought it so far down from his original number, when in reality, that original number was not even reality in the first place, right? It was never going to fly, and it was to throw out a shock and awe number so that new numbers seem like great numbers. This is very commonplace. In the context of investing, one consequence of anchoring is that market participants with an anchoring bias tend to hold investments that lose value because they anchor to their purchase price. Purchase price anchoring is probably the biggest problem that you'll get into. When I see people, they'll be like, well, what should I do with this? I'm up or I'm down. I'm like, well, what does that have to do with anything, right? If I pay X amount, if I buy a stock at $50 per share, well, that's just, one number. I could have bought it 49, I could have bought it 51, I could have bought it 45, I could have bought it 55. That is meaningless, but people want to anchor to it, and they want to say, well, because I'm up or because the stock's gone this way, does that mean I should get out because it's up above that? They're anchoring to this as though that's fair value, as though, a lot of people kind of unintentionally, they create this as kind of that baseline, and they think that anything that dips down should then go back, and anything that goes up should then come back, and so forth. And that's just not how it works. You're anchoring to something of a purchase price, which will cause you to hold losers because you think they should go back to fair value, which you're basically linking to your purchase price. And you think anything that goes up must be overvalued because, well, it's got to go back to fair value, which happens to be where I pay. That's just not the way it works, right? So this causes people to hold losers, hoping to get back to break even, feeling like there's value in doing it, and selling winners far too early. So in anchoring, this is attaching your opinion to some arbitrary metric to compare the price of the stock to that metric. This is a natural response to buying and selling in all fields. This can promote poor decision making, especially when it comes to managing your positions. So the next time you're thinking about, buy, sell, it better not be because, well, I'm up this or I'm down that or it's gone. It should be part of your plan. Why are you executing where you're executing and so on? It shouldn't be, well, as soon as the stock goes this much, it must be overvalued and that sort of thing. That's just not really how it works. Work out the probabilities of this trade. Think about it in context of something that's going up. Trends are powerful in the market. Something that's going up, if you just told me stock's going up, is it more likely to go up or down tomorrow? I'm going to say up. It's already going up, right? So think in those terms, that for a trader, it's a great methodology to say buy high, sell higher. That's going to be completely unnatural, but it's the better approach, right? I buy on strength and I sell on even more strength. That's a good trading approach. Investing could be entirely different, but we're talking trading, right? Buy high, sell higher. Buy expensive, sell more expensive, right? That's the concept of trading trends and momentum, and will get you thinking better about your investments big picture. So this is our class on anchoring.